Welcome back to another video. In this video, I'm going to give you guys a step-by-step guide to buying your first rental property coming up right after this. Thanks for tuning into another video, guys. If this is your first time tuning into my YouTube channel, welcome. My name is Alex. I'm a top producer real estate agent out here in Washington, and I designed this whole YouTube channel around real estate. So think about hitting that subscribe button if you want to learn more about real estate and ultimately learn how to make more money through real estate. Now on to the video you're waiting for. Let's jump right into it. The first thing that you need to do to buy your first rental property is you need to get your down payment in order. Buy an investment property rather than a primary residence, you're gonna need to put at least 20% to 25% of a down payment. This means of every $100,000 of a mortgage you take out, you're gonna need to put down at least $20,000 or $25,000 of your own money. If you were to put 25% down rather than 20% down, you will get a way better interest rate on your... Now, if you were to put 25% down rather than 20% down, you'll get a way better interest rate on your investment property. But if you were to put 25% down rather than 20% down, you will get a way better interest rate on your investment property. And keep in mind, interest rates are already higher for buying investment properties, and normally they're about 0.5% to 0.75% higher if you were just to buy a primary residence. The second thing you need to check while you're buying an investment property is your credit score. Keep in mind, a good range is around 620 to 720 for a credit score, but anything higher than that is absolutely excellent, and you're only going to get a better interest rate with the higher credit score you have. You need to halt your investment property purchase, and you need to look into ways of repairing your credit, but the number one way to repair your credit is pay your bills on time. After you got all that in order, number 3 is you need to talk with a mortgage lender to see what you can get pre-approved for. You know, I've been in this business long enough to know that people do not talk with a lender and they think they can afford X amount when in reality it's way less than they can think. Now, number 3 is you need to speak with a mortgage lender to get a pre-approval letter to know exactly what you can afford. You know, I've been in this business long enough to know that people do not talk with a lender and they think they can afford X when in reality it's way less than they can think. So just go talk with a mortgage lender so you know exactly what you can afford, so you're not out there wasting your time looking for properties that are way above your budget. A mortgage lender would take my last 2 years of tax returns and take that average income for my approval. So keep that in mind as well. You're gonna need your last 2 years of tax returns. So number 4, now you go out and actually do the fun part. You start looking for properties to purchase. Now you know exactly what price point you can afford. You go narrow down the properties, and you want to find good cash flowing positive properties. And I just made a video on how to calculate cash flow properly, so I'll link that into the... Now, number 4, and this is the fun part, now you actually go out and start looking for properties to purchase. And how do you begin to look for positive cash flow properties? Well, I just made a video on how to calculate it from the beginning to the finish, so I'll link that in the description if you're curious of how to actually calculate cash flow and properly calculate cash flow, because that's the most important part of this equation, is buying investment properties that are going to have a good rate of return and not going to put you in the hole from day one. So since we're on the train of talking about properties, what property type should you guys actually look for? You know, you could buy a condominium, you could buy a single family, you could buy a duplex, triplex, quadplex. You know, what should you start looking for out there if you have no idea about investment properties? What I would recommend is a single family house. Now, why I say this is normally when you buy a condominium, there's going to be a HOA and a manager. So you're going to have to pay an HOA due. All this is going to do is eat away at your cash flow every single month. On top of that, an HOA it's going to be very strict on you tearing down walls, changing the structure. So when you buy a single family houses, you can renovate it the way you want to, get it ready to rent out, and you're not going to have that HOA due that's going to eat away at your monthly budget. Now, number 5, you find the property that you want. Now you simply need to submit an offer, but what's really important, and you guys need to listen up for this part, is you need to submit an offer where the numbers make sense for you and where you would cash flow on that property. Now, if the seller does not agree with your offer, well then simply walk away. Remember, there's new properties coming on the market every single day, and you're not gonna find that great deal right away. You might need to look at 20, 30, 40, 50 properties. But once you find that great property and you get it for the price that you want, you're gonna be happy with yourself for walking away of that other property that you might have been in the hole for a year or two because you paid too much upfront. So once you get the property, now you need to make sure it's ready to rent out. If it's already ready, great. If you need to renovate it a little bit, you can do that yourself. But once it's ready to rent out, you need to simply put it on Craigslist, put on ads. What I would recommend for you guys out there is do not get a property manager at first, because it's good for you to understand how to manage a property, collecting the cash every single month. And a good rule of thumb is if you do hire a property manager, it's normally 10% of the monthly rent every single month. So if that property you're gonna buy will rent out for $2,500 a month, you're normally gonna pay a property manager $250 a month to manage that property. And that's only gonna eat away from your monthly profit on that property. So just manage it yourself for the first year, and maybe if it's too stressful, then you can hire a property manager, but at least try to do it at first, because you're gonna save yourself a ton of money for that first year. Last step is scale up. Now what this means is simply just buy more investment properties, and trust me, you're gonna thank me later for doing this. Just repeat this process, and the most important thing is finding. Now the last step is scaling up. Now what you need to do is just repeat this process that I just went over in this whole video, and you're gonna thank me down the road. Trust me, because it's gonna make an extreme amount of wealth for yourself. But the most important part, and I'm gonna say it again, the most important part is finding good cash flowing properties in expanding areas. This whole thing about buying investment properties will not work if you're buying horrible properties that are not cash flowing. Well, you're only gonna lose money. Buying investment properties is not a solidified, you're gonna get wealthy right away. If you're not making good investments, well, you could actually end up losing all your money. So make sure you're buying good cash flowing properties in expanding areas, that you can in return maybe sell for a way greater profit, 10, 20, 25 years, and then you're setting yourself up for retirement. There you guys have it. Hopefully you liked the video and got some type of value out of the video and have a rough understanding of how to buy your first investment property. We'll see you guys for the one video coming this Friday. Stay tuned for that, and we'll see you guys then. Peace.